Good afternoon and welcome to NYFP. In midday trade on this Monday, the major equity averages remain in the red. Joining me at the beginning of the week and the new quarter is Peter Cardillo of Rockwell Global Capital. Peter, good afternoon. Thanks for joining me today.
Nice to be back.
Well, we saw record gains for the Dow and S&P 500 in the previous quarter, but we've kicked off the month of April as well as the second quarter. And earlier today, we did get some weakness in terms of ISM manufacturing. But given that we have more PMI manufacturing coming out tomorrow and China's official readings as well as HSBC were better than expected, what do you make of today's action?
Well, I think today is really a hard day to judge what may be the kickoff to the second quarter. And the reason for that is simply because of the fact that this light volume, Europe is on holiday due to Easter Monday, and even some of the Asian markets were closed. So basically we have light volume, and yes, we did have a disappointment in the ISM manufacturing index, and of course if you notice that big drop that we had in new orders, that suggests that the sequester is taking its toll on companies, going forward here. But again, the index is still in growth mode, although growing at a slower pace. So I kind of think, coming off of record closes last week, the ISM gave an excuse to take some profits off the table, and considering the downward decline that we have, it's pretty much contained. So it's really due to a lack of volume.
And since the last time we spoke, we have a lot going on in the Eurozone in terms of Cyprus as well as a political stalemate in Italy. Now later on this week, we have the ECB rate decision and we have Mario Draghi speaking after that announcement. What can we expect out from the commentary?
Well, I think that due to the Cyprus situation, and of course the Italian political stalemate, I think that there's a good possibility that Mario Draghi might actually inject more liquidity into the system, or possibly even lower interest rates. That's probably a long shot, but maybe more TLRO is on its way, and I think that while I remain confident that the stalemate in Italy will be resolved, in fact, the Italian president over the weekend did come up with a 10-man council that probably is going to try to form some sort of a national government. And so if that happens, that certainly would take the pressure off in terms of the political situation having a negative effect on the markets. But again, if that doesn't happen, then I think there's a possibility that we could have a surprise out of the ECB.
Well, the next time I talk to you, which will be on Friday afternoon, we'll see what all the central banks do this week, and we'll also find out what happened in terms of employment here in the U.S. for the latest month. And given that earnings season gets underway at the beginning of next week, what do you expect in terms of risk for the jobs report as well as earnings season? Well,
in terms of the labor report, I'm looking for a 185,000 non-farms, and the unemployment rate staying at 7.7%. I think the economy managed to create jobs last month, but I think going forward, until that sequester problem is resolved, we're going to see a decline in hiring. So I think the markets are going to have to get used to looking at weaker labor data going forward. That doesn't mean that it's not going to grow, but it's just going to grow at a slower pace, as opposed to perhaps hiring within the 2 to 250 range, which it only happened once in the past 7 months. And so the norm is basically somewhere between 175 and 210.
Okay, Peter. Well, thank you so much for joining me at the beginning of the month as well as the week, and I look forward to speaking to you on Friday.
Thank you.